Hello, everybody. This is Noah and John, and we are from UrbanDigs, and it is Friday. So you're going to get your weekly Manhattan market update. John, we got stuff to talk about. Let's look at Manhattan supply, 5193. It looks like it's going up, but not a lot. Show me that chart.
Yeah, it is up, Noah. That's another 2%. I think the train on supply has left the station. It is still accelerating, but it's still in the slow section here. So if you're leaving Penn Station, you're still in that long, dark tunnel, but you're moving. It's just slow.
Yeah, and you know what? I would have thought that we would be higher by now, but it's still early in the listing season. We still got a good month and a half till we get to the peak April month. But I mean, if we're going to hit 6,000, we need to see a lot more listings come on the market because demand is still very high, John. And speaking of demand, let's move on to pending sales. The measure of Manhattan demand, 4,097. Show me that chart.
Yeah, and that's actually up, Noah. So this is the first tick up we've seen in pending sales since mid to late December. So supply really has to get its act together because pending sales might have turned the corner. And if that starts coming in hot and heavy, then it's going to be that market pulse number is going to shoot right back up.
And that's the point. That is the point of today, Johnny. And that when I look at the market pulse and I look at this chart, I put out a piece about a week ago saying seeking out the buying opportunity. I think that buying opportunity, that peak leverage may come sooner rather than later because this ever so slightly, this trend line is starting to change its slope just a little bit right over here. And if that's the case, we may not fall down to this level and stop. We may fall a little sooner and start to come up like that. And again, that's not what buyers want to hear. And we got to keep an eye on that. So it's very interesting stuff to watch as it's unfolding. Let's go to those weeklies and see if they give us any clues, Johnny. I'm looking at supply. That is showing a nice little pop, 403. Show me that chart.
It is 403. That's up nearly 8% from the week before, which is actually a down week. So we're back kind of on track where we need to be. I mean, it would be nice to see another 150 or so listings to get back over that 500 mark. But, for a February, I suppose, late February, I think this is sort of on par. We're going to start seeing more listings as we get into March and certainly April.
Yeah, and I think we reached a peak level of around 550 or so last summer. So that's kind of our soft target, so to speak, to kind of compare to our high watermark. We'll keep an eye on that, Johnny. Let's go to contract signed. That did bump over the 300 level, and that's the thing. The demand is just there right now for Manhattan real estate. Johnny, show me that chart.
Yeah, and what I would point your attention to here is just look at that trend. It's just 1, 2, 3, 4, all 4 weeks sort of increasing from the last. And I think that's kind of been the story of contract signs for the last year or so. It's just it keeps increasing and it slows down and creeps right back up. So we're kind of in there, Noah. And again, like we talked about supply coming in hot and heavy in March and April, pending sales or rather contract signs also going to do the increasing bit soon.
Yeah, and that's ultimately going to have probably an effect on price action. We talked about this last week. Prices are popping. Prices are popping when we're looking at the closings. Those closings were signed late last year. We're not talking about where deals are now. Deals today, we're not going to see that data for 3-4 months, right? We'll get that data around May or June or something. We'll find that out. But right now, prices are popping. It's because the luxury sector is now a big part of those deals. And that's going to happen for another couple of months until it fades out. This is like mid 2019 mansion tax all over again with the big pop and whether or not that's going to come back down. Sellers in a broader market should not confuse what's going on with the luxury sales popping numbers with thinking that we're at record territory. We are not at record territory. I think this market is somewhere around 2019 and headed towards 2018 right now, but prices are definitely rising, Johnny. But I want to get out of the sales market and I want to get into the rental market, John, because you whipped up this beautiful chart showing a very interesting combination of events happening in the Manhattan rental market, which is rising rents. Well, we're rising rents and I guess they're flatlined a little bit, but they're at their highs. And new listing activity is very, very, very low. So I imagine the inventory for rentals right now is quite tight.
Yeah, and I think there's a number of things happening. So if you're listening to the headlines out there about what's happening in rents, I mean, people are talking about 30% year-over-year increases for Manhattan rent looking at January. And yes, it is 30%. But if you zoom out, if you look at this broader trend, yes, they came up 30%, but they're just back on trend. So I think, just to talk about the rent portion right now, I think these one-offs of 30%, 20%, I think those days are somewhat behind us now. I think as we sort of move into 2022, these increases, especially on a month-to-month basis, are going to be a lot more muted. Now, are they going to keep increasing? That's where I'm going to look at the new listings here. Look at that supply, which is just sort of at low level. So I certainly don't think that's going to pull rents down by any measure. I think if anything, that's going to strengthen rents and actually push them a little bit higher here, but certainly not on that 30% level.
Right. And I'm wondering, I mean, we got some peak activity here in the summer. Same thing over here. So I'm wondering, where does this go as we start to go up, and how high does it go? And do we sustain that level, and how long do we sustain it for once we get to that peak period? That's what I think I'm looking forward to. So that's going to be a few months from now, but you're right. This is just a tight inventory, rising to moderating sales, rentals rates situation going on right now. And I mean, if I'm a renter in Manhattan, if I see a deal, I'm signing it. That's what I'm saying. I'm not taking, I'll take the weekend, I'll get back to you Monday. That's not what you want to do in this type of environment. So yeah, right. That's what I see from the data here. We'll let the brokers comment on that. Thank you, John Walkup, for pulling up all that data. We really appreciate it. I am Noah Rosenblatt. We are both from UrbanDigs. Don't forget, guys, if you got questions, we got answers. Check out our forum right down here. If you have not listen to our Ryan Serhant podcast, it is something to listen to. It is a wonderful take on what's happening in the markets right now. If you want any of the reports we talked about, they will be right over here. Other than that, this has been your weekly Manhattan market update. We'll catch you next time.